Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. Before I get started, I'd like to make it clear I'm not a financial advisor. Everything I say is for informational, educational, and entertainment purposes. Technical indicators like those I use here are not accurate 100% of the time. Company fundamentals and macroeconomic factors can drive share price changes differently than what we'd expect based on technical indicators. My goal here is to bring these companies to your attention so you can decide for yourself whether or not they're good investments for you. So please, if you plan on investing, do your own due diligence before purchasing shares in any company or consult with a financial advisor. And with that said, I want to open by saying if you hear crashing thunder behind me, it's because we're having a terrible thunderstorm. So I apologize. But with that out of the way, today we're taking a look at Cal-Maine Foods, Inc., ticker symbol CALM. This is a small cap company with a market cap of $2.1 billion. And as you can imagine from the company's name, this is a food company. It's a rather large food producer in the United States. Taking a look at the annual chart here, you can see it's well below all the moving averages, just right around its 52-week low, which it just hit a couple days ago. If we scroll down to the RSI, you'll see it is not quite in the oversold zone, but it is close and is rising. The stochastics are oversold and appear to have begun to swing up again. The volume chart shows a recent spike in selling pressure, which is declining and has now been replaced with buying pressure. And the MACD looks like it has reached a trough and is turning up again. And one last thing I'll point out here on the annual chart is you'll see this great big gap here where the share price gapped down. That's a significant drop, almost $5 a share. As we know, 90% of gaps fill, and if that does, you'll go from about $51 to $54 or so pretty quickly. And it looks like if it were to return to that level anytime soon, you'd be able to meet right up with the 200-day moving average, which would be a nice boost. And as I like to do, I will take just a broad 10,000-foot overview of the company fundamentals here. First thing to be concerned with, I think, is the significant short interest, 17% short interest on this company. On the flip side, 93% institutional ownership. So smart money does like this company. However, it could be set for a short squeeze. And of course, if you bought in at this level, that would be good for you. The financial strength here showing debt. It doesn't particularly show much here. We're not getting a comparison. So I looked up the company's debt. And it has extremely low debt. It does have liabilities. Those liabilities are a little less than half the current assets and about 2.5 times the annual cash flow. So it does seem manageable. The PE ratio is less than 60% of other companies in the industry. And as you see, a 2.86 is certainly low, I think, by any measure. And the gross margin here is average, but the operating margin, on the other hand, is best in class. It beats out 100% of other companies in the industry. And you'll see as we scroll down, this is not the only 100% this company has. The return on equity here is excellent, beating out 93% of competitors in the industry. The growth rate greater than 100% of its peers. Again, best in class. And the dividend here, it says it beats out 100% of other companies. Keep in mind, this is based on the recent plummet in share price. So the yield is probably a little deceptive here. Realistically, if it were to return to a more reasonable price, a price that it has maintained throughout the rest of the year, then it certainly wouldn't be 11%. And even though it does have this 11% payout dividend yield, the payout ratio is still below 24%. So regardless of the percentage yield, it is a very sustainable dividend. So that said, I think Cal-Maine presents a reasonable buying opportunity at this point. But please let me know what you think in the comments below. And if you got something out of the video, I would really appreciate it if you hit the like button and subscribe to help out the channel. If you enjoy the brief overviews of companies that might be good swing trades, please leave a comment for the YouTube algorithm. And if you like to tell me what I got wrong, then you can leave that in the comments below as well. Certainly open to criticism. Or if you'd like me to take a look at a specific company that you are interested in using these indicators, just put that below as well, and I will get to it as soon as I can. That's all for today. Thanks for watching, and good luck with all your investments.